In this unit 1.4, we are going to discuss about variable cost, fixed cost and mixed cost. First, we will need to understand the behavior of cost. The cost behavior is an indicator of how a cost will change in total when there is a change in some activity. Cost behavior refers to how a cost will react to change in the level of activity. The most common classifications are variable cost, fixed cost and mixed cost. One by one we will discuss. Variable cost. The total amount of variable cost increase in proportion to the increase in an activity. The total amount of a variable cost will also decrease in proportion to the decrease in an activity. It means if I am producing more units, my cost will incur more. If I am producing less unit, my cost will incur less. A cost that vary in total in direct proportion to changes in the level of activity. As I've told you, it's based on the level of activity. Your total text, here we are taking the example, your total texting bill may be based on how many texts you send. Like on x-axis, the number of texts sent, and on y-axis, the total texting bill. If we are going to increase or we are sending more texts, so we will have to pay more bill, right? So this is directly proportional. Here in total, we are talking about in total, it is changeable, right? If you are discussing here in total, it's mean the more number of unit produced, the more cost will incur. The more text will send, the more cost will incur, right? Now, the behavior of per unit cost. How we will predict this behavior? However, variable cost per unit is constant. Okay, how the variable cost per unit is constant? See, the cost per text sent may be constant at 5 cents per text message. Like if I am sending my per text message as 5 cents, right? So my per unit price is constant. Like if I am sending 10 messages, so it become 10 5s are 50. I am sending 100, it will be multiplied with this 5 cents. So whatever the level of activity, it will multiply. So in short, variable cost per unit is constant, right? Okay, now take the another example. I'm producing 1 unit and my per unit cost price is 10. So what will be my price? Constant is per unit is 10. If I'm producing 2 unit, right? 2 tens are 20. Mean if I'm producing 2 unit, mean my cost increase to 20 units, right? So my per unit price here is constant, right? We can see here with the help of this diagram, the cost per text unit, that is constant, the number of texts sent on x-axis and the cost per text sent on y-axis. Now the activity base. Now the cost driver, we are going to discuss here about the cost driver, the activity base. A cost driver is the direct cost of a cost and its effect is on the total cost incurred. For example, if you are to determine the amount of electricity consumed in a particular period, the number of units consumed determine the total bill for electricity. In such a scenario, the number of units of electricity consumed is a cost driver. And here is the number of examples we have, that is machine hours, the labor hours, the miles driven, the unit produced, and so on. Now we are going to discuss about the fixed cost. Fixed cost, a cost that remain constant in total. When we talk about the fixed cost, that is fixed in total. Like I'm talking about my rent, my building rent, right? So my building rent is constant per month in total, regardless of change in the level of activity, whatever the level of activity is, right? If my factory building rent is 50,000 and I am producing in 1 month 10,000 unit, in second month 20,000 unit, and in third month 4,000 unit, but my rent is not change, right? This is constant. Your monthly contract fee for your cell phone may be fixed for the number of monthly minutes in your contract, right? Now another example, that your monthly contract fee for your cell phone may be fixed for the number of monthly minutes in your contract. So number of minute used within monthly plan, that is on x-axis, and monthly cell phone contract fee on y-axis, right? So in total fee, that is constant, whatever the minutes used. Fix the behavior of fixed cost per unit, however, if expressed on a per unit basis. Now we are talking about the per unit cost, how it's behave. The average fixed cost per unit vary inversely with change in activity. The average fixed cost per cell phone call may decrease as more calls are made. If we can see here, the monthly cell phone contract fee is on y-axis and number of minutes used within monthly plan on x-axis. So the average price per call phone may decrease as more calls are made. If we are increasing more calls, so per unit price will decrease. So we can say here the per unit cost of fixed cost is varies. Types of fixed cost. Here we are going to discuss about the types of. We are going to discuss committed fixed cost first. The committed fixed cost, also known as capacity cost, are costs that the company is required to incur to maintain the current production capacity. These costs result from long-range decisions made by top management about the size and nature of the organization, and they must be incurred if a company continues to use its existing capacity to produce and sell its product or services. That's why here we have seen here the long term cannot be significantly reduced in the short term, right? Example of committed costs include depreciation, rent, supervisor's salary, property taxes, and depreciation. These are the committed fixed cost, right? Depreciation on building, equipment, and real estate taxes. What about discretionary fixed costs? Discretionary fixed costs are costs incurred because of policy decision by management. They are more likely to change during a time period than committed costs. These costs are usually set at a fixed amount each year at the discretion of the management. Discretionary fixed costs are also known as managed cost or program cost. The example of discretionary costs include advertising, research and development, employee training program, charitable contribution. Expenditure on discretionary fixed costs are usually regarded as investment in future. Now the mixed cost. Now the mixed cost. Mixed cost, also called semi-variable cost. Mixed costs are costs that contain a portion of both fixed and variable cost. The fixed element does not change with change in activity level at all, and the variable component change proportionately with activity. Common examples include utility and even your cell phone. Now we can take the another examples of mixed cost is the employee benefit. How? The companies typically pay fixed base salary and variable bonuses and commission depending on the employee performance. Telecommunication expense, when we say the phone calls, your cell phone. Phone company typically charge a fixed amount regardless of actual usage plus a variable component which depend on usage. Third one is the car rental expense. Car rent expense has a certain base fare and a variable fare which depend on actual distance travel and time spent on the trip. So these are the example of the mixed cost, right? Or we can say the semi-variable cost. Now here we are going to discuss about the cost classification for predicting cost behavior. Behavior of cost within the relevant range. Now we are going to discuss first the variable and then we will discuss about the fixed cost. As we have discussed about the variable, the total variable cost is changed, right? How the total variable cost is changed? If we are producing more units, the total variable cost will change. The more labor will required, the more material will required, right? So the total production cost will increase if you are increasing more units. But my per unit cost is remain constant. Like if I am producing 1 unit at the rate of 5, so it becomes 5. If I am producing 2 units at the rate of 5, 2 5 10. If I am producing 3 units at the rate of 5, 3 5 are 15. So my production in total cost is vary, but my per unit is remain constant, right? Okay, now move toward the fixed cost. Now the total fixed cost is not affected by change in the activity level within the relevant range. Like I am giving the rent, right? I took the building on rent, factory building. I'm talking about the factory building, right? The factory building rent is 15,000. This is the 50,000 rent is fixed, right? In total, the fixed cost is not affected by the change in the level of activity. Like if I am producing 10,000 units in 1 month, like in January, so it does not affect on my rent. My rent will be 50,000. But in the second month, I am producing 40,000 units, but my rent is still on 50,000. In the third month, I am producing 1 lakh unit, but my rent of factory building is 50,000. So my total fixed cost is remain constant or the same. But what about the cost per unit, fixed cost per unit, which may decrease or increase as a level of activity change. Fixed cost per unit decrease as the activity level rise and increase as the activity level fall. Like if I want to calculate the per unit cost, so I will divide my total cost divided by number of units. So my fixed per unit cost would be change and every month, right? So we can easily calculate the cost per unit and in total, and we can see the behavior that in total the variable cost is changeable, but in variable cost per unit is constant, but in fixed the fixed cost in total is constant, but per unit is variable in nature.